That breakout play while you were scrolling, I was live, dropping levels with the rip crew vibe. Your guru's gone, he sold too soon. We nailed that flag on the 5-minute zoom. Chart God called it, Fitwit's late. We post our trades, no need to fake. Stocktwits knows and your Discord slow. We were live while your alert said no. Streaming charts, making gains, throwing shade. Community rip is where legends are made. Stocktwits knows and your chat's a ghost. Try to flex, but we cook the most. Bears cry foul while the bulls just coast. Stocktwits wins, let's raise a toast. Whoa, whoa, whoa. You walked the top, we shorted the hype. You read our blog, we read the tape right. Volume surge, we saw it first. Posted that setup before it burst. We ride the rip, we fade the fake. We mean the market till the close bell shakes. Tag your tickers, shoot your shot. This ain't a cult, it's just too hot. Stocktwits knows and your Discord slow. We were live while your alert said no. Streaming charts, making gains, throwing shade. Community rip is where legends are made. Stocktwits knows and the algos froze. We're the edge while your strategy blows. Your DMs dry, our alerts explode. Stocktwits wins, just thought you'd know. Stocktwits knows and your Discord slow. We were live while your alert said no. Streaming charts, making gains, throwing shade. Forget your forums, forget your posts. Stocktwits wins, coast to coast. Oh.
Shall we get started?
Are we on?
Hello?
Hello.
We are live. Hey. That was some intro as usual. Hey guys. We've got our
What's happening?
I don't know. The market's up and down. We got people screaming that there's head and shoulders action, and I don't know, I'm not naming any names. Nick. Head and shoulders boy.
Oh, come on now.
No, we hey, let's get really into the show now. You're watching the Community Rip live right here on Stocktwits and X and YouTube and wherever else you might want to follow us. It's your boy Bags with GP. Hi GP and Nick. Hi Nick. Guys, I mean, really though, what are we seeing out of this market? Nick, I'm teasing you a little bit about you said something about a head and shoulders just a moment ago. And Nick, you got the wet blanket thrown on you by GP. So just curious what you're seeing there, Nick.
I'm not. So if you're, if you take a look at the Qs and you pull up the monthly, we haven't found a whole lot of traction as we kind of push through the early 2025 highs. And so what that says to me is that we're range bound now, which has been, so like essentially we're in 10 weeks of range already. You can dial it down to the weekly, and you can even see it on the weekly. We've got 1, 2, 3, 4, 5, 6, 7, almost within those 10 weeks. The Friday close has been pretty damn tight. And then you flip it down to the daily, and the only reason I pointed out the head and shoulders is just because that's what I've been seeing on, the FinTwit. I think that you could, and we spoke to it a little bit last week where, sure, you could argue that that's forming. I thought it was kind of entertaining yesterday where we, spiked the neckline and then reclaimed it. The way that I'm kind of actually looking at it now is almost a short-term double bottom where you could have argued that pivot low getting reclaimed yesterday was a pretty solid entry, at least on the NQs, that the double bottom would then confirm between that above that 23.8. And we're sitting right on that trend line. So you could also argue that even within the range bound behavior that we've seen over the last 10 weeks, you could even argue that it's got an ascending triangle look to it. The only reason I am even entertaining the idea of the head and shoulders is just we've got the Fed announcement on the 17th. And in the back of my mind, I'm trying to ask myself, like, are we going to sell off into the announcement, or are we going to rally into the announcement, or are we going to just remain chop into the announcement? Which again, like, we don't know. We'll just have to kind of take it day by day. I think that depending on your time frame, even if the head and shoulders does play out, when you hit that measured move down to the 22.2, 22.4, that is your add zone if you're a longer term investor. By the time that plays out, you've got the 200-day like just below at 21.5. And again, like as we've spoken to before, like when the measured moves hit on any of these patterns, whatever pattern it is that we're looking at, typically when the measured move hits, it's a moment of pause or reversal. So I would be looking to add to my Q's position versus like trying to short the head and shoulders on a shorter term trade. If you're like a short term trader, like by all means, like it's an opportunity to throw a trade on. But by no means am I a bear. I'm just trying to think about what the price action is going to look like going into the Fed announcement, because ultimately I think that is what the market is kind of waiting for before we kind of make a definitive move in or out of this range. The head and shoulder, let's just hypothetically say the head and shoulders played out to the downside.
Yep.
That still remains, the measured move is still within the range of the range that we've been in for the last 10 weeks. So all you're saying is that like we're just going to test the low end of the range. But I think the name of the game going into September for most is probably remain small, nimble, and just kind of have an open mind. I don't know. I don't know what the catalyst was for the move yesterday, but I kind of thought it was because of like one, the tariff news, and then I saw like the Trump is dead stuff tweet or trending on Twitter. I'm like, is that for real? And then
No.
yeah. So I'm certainly not bearish. I just think that heading into the Fed announcement,
for a man that's not bearish, you're sounding pretty bearish.
no, not at all. I think because
opportunity to buy lower.
I would add lower and I would add versus strength as well. So if you're in the camp that this is the head and shoulders, but you're looking to get long, your entry is either at the measured move or at the reclaim of the neckline, and then again through the high of that right shoulder. I think September is going to provide, or is providing, a monumental amount of opportunity. It's just I try to have as many like if-then scenarios kind of played out. Obviously, if like weakness really hits, then I got to completely change gears, because I'll likely end up getting stopped out of quite a bit of my long positions.
I think that's fair, Nick. GP, you had an interesting take, and I'm highlighting the candle in which you had an interesting take on prior to the show starting. Maybe you can enlighten us or dispel some of those bearish vibes I'm picking up from our northern friend here.
Yes, I'm going to call him the Yeti on this show. No, I'm joking, Nick, but
I am very fair-skinned. I will burn.
yeah, but you're like the barefoot, like Bigfoot barefoot. We're lurking in the woods, looking for your bear moment. We've been sideways since late June, right? We've been sideways. We tagged a price yesterday in the Qs that we tagged in June. That's sideways by definition. You can argue it either way. We had a historic move out of the V we've been sideways consolidating. In my opinion, there's no the way these head and shoulders work is that I want to see blowout volume on either the left shoulder or the head. You don't see any of that happening here. You just had a 4% correction in the Qs, multi-percent corrections in so many different names. Tells me that there's more consolidation going on here than a head and shoulders pattern. We can go through the list of names that have 20, 25, 30, 40% declines over the last couple of months. Hims is a good example, high flyer. Lemonade is down 20%. Hims is down 30, 40% right into the 200 SMA. Rocket Labs is down 20%. ASTS is down 20%. We can go on and on and on. Coin is down 30%. MicroStrategy is like I can go through the list, right? And so if it's a head and shoulder, these are only going to get worse. But to me, this is a consolidative pattern. It's the wicks that you can see in the chart is apparent down here. Buyers are stepping in quite often. Technically we are still working perfectly. Like yesterday's price action and Friday's price action was brutal. There was no technical support. Everything just kept breaking. And then it stops at 10 a.m., right? It's not like, hey, I'm going to panic. The market's on its left. And then all of a sudden stops at 10 a.m. Like tells you kind of all you need to know, right? This is not a market that has any real selling that's going on. It's algorithmic. It's stuff that's happening and it's getting to these levels. Look, today we had a move up, and then we've been sideways for the last 4 hours, right? Like, if there's real panic, if there's real stuff going on, there'd be better indicators to me in the price action. It's garbage price action. We've seen garbage price action for the last 3 or 4 months, while all this consolidates. And yesterday was it broke the 50-day into 9:30 a.m., right? And then accelerated lower, came back in the morning at 9:30 to reclaim the 50 SMA on the daily, got rejected, tried again. Second rejection, went back to retest the lows of yesterday. And then obviously the Google news came out exactly at 4:01 p.m. and 1 second after it's already done its thing for the day, right? Whether the zero DTEs or whatever you want to call it. To me, it's still toxic price action. We've been talking about the toxic price action, but it's constructive and consolidative for next leg higher in a lot of stuff. We had a 1.5. So, people talk about September seasonality. You know what the average down move is in September? Over that September, it's down 1.5%. We had that on the open within 5 minutes of the open yesterday. So, to me, it still seems very consolidative. It tells me that we had a 4% correction in one of the strongest uptrends that we've seen in a long time. This is stronger than the COVID uptrend. And the COVID uptrend was the cheat code for free money for everyone. And this was stronger, right? So you had a 4% correction right into the 50-day. Typically, the first test of the 50 days are buyable. If it breaks, obviously get defensive, but right now it's very constructive.
I think so too, GP. I was just saying I've moved some money around. So I've traded in and out of a few things over the past 3 days, 3 sessions. And Nick, I see your head and shoulders. And one thing that I will go to sleep and wake up screaming in fright because I can hear GP whispering in my ear, there's no volume on the right side of a head and shoulders pattern. But there is on the chart, as you can see, there is some volume over there. So I'm not discounting that it's formation that way. I just don't think it's happening. And I think the way the market rebounded back, I was so ready to go all in on calls yesterday, but that's an issue with my brokerage. I was so ready to go in on calls yesterday near the open. And then last night's Google news really pumped the market and gapped it up from yesterday's close. So it's natural, I think, to see some selling from today's gap up off of that news. I think structurally everything's fine. Just like for weeks on end, we've talked about the Mag 7 and the Megas, and it's somebody else's turn to start filling in those voids of what the others have been doing. I think it's Apple and Google's turn right now to lift all the boats. The rising tide lifts all boats, so to speak. And I think that's what is happening, because you didn't really see this big of a drawdown that we saw yesterday in the Qs really across the board on every name, and just seemed more selective. So I'm in the camp with GP on this one, Nick. Normally I'd like to ride along with you on a bearish thesis, but I put some money to work today. I swapped around a few things. I posted all that on Stocktwits, so if you want to check that out, there you go. 3T 36
W.
You
Take a look at the monthly.
You throwing up gang signs, GP? This is not that kind of show.
No. This is the Can Slim signs. It's a 3MT. Backwards 3MT. Take a look at. So pull up the monthly here as well to go along with what we're saying. Right. Give you the technical. That is pretty heavy volume, Nick.
Yeah.
In your Can Slim approach, in a very, very tight range, a little bit bigger than the 1.5% 3-month tight, 3-week tight range. It's 551 to 565, so it's about 2 and change percent. But that's still heavy, pretty. But like, compare the sell to the tariffs to all the buys, and you can see that it's to me it's consolidating, right? So largest time frame out. Look at the quarterly, largest time frame out, and work your way down. Even if we get September seasonality lower, this is the step back theory here is that the firepower that liquidity will bring will get us to that 7,700 level that we've been talking about for 2 years now. And so
on the SPY.
Right on the SPY, a lot of people are talking about 6,700 as the next target, and I want to know where they were in 2023 when we called for it then. But yeah, this is power trends, right? These are insane power trends. You had a 50% retracement tag, prior all-time high tag in April. And out of that created one of the most historic bull trends that we've seen. Maybe not historic, but up there in history. So maybe it's the final leg of it all. Maybe, but wait till it happens at this point, and then
Hey,
ride the
Nick, I don't discount anything that you're saying. I mean, I've been a little bit, I don't know, wishy-washy back and forth on my own thesis, because along with potential rate cut coming up, and as the research shows, it's about a 50-50 what happens after a rate cut. But the Monday before that meeting is corporate tax payments are due. And I posted something about that earlier in the weekend. I mean, we could see a drawdown with some of that. So I'm still sitting on some dry powder, but I rotated into some more things that I think have better opportunity.
I'm just saying, right, even if it does resolve down, I think it's presenting a lot of long entries and a lot of possibility. I'm certainly not calling for like a longer term top by any means.
Now you said we're going to zero. I clearly heard you.
The name of the game almost this entire rally and what it has shown is like even the intraday volatility has all been backfilling. Very rarely have we seen on this rally any type of weakness, really intraday weakness, see follow through. So even on the days that have been weak, intraday you're seeing the lows get retested, like let's say through the lunch hour or even an hour, 2 hours into the day, they're still holding. So like it feels like perpetual kind of backfilling and a grind higher. Yeah, I just
And so like to add to that is like even though the small caps have been weak for 7 days now, right? They they're the only index, I believe, that has held more than 50% of their gains from the Jackson Hole day, right? So like the rotation that's happening in small caps is still really, really small, and this is setting up. They're shorting at every possibility until they can't anymore. But this, the fact that you see small caps not breaking down and holding a majority, I think it's like 60, it's bang on the 38 2 retracement of the move for 7 days is another additional piece that you're like, okay, well, if small caps go, everything goes. Outside of like those random 1 or 2 day distribution days or rotation days, when small caps are moving, everything is moving. So the
yeah.
small caps holding their Jackson Hole gains, unlike the Qs, which did not hold the Jackson Hole gains. Um, it's the fuel to the fire that you kind of need this, and the fact that Waller has talked about rate cuts and IWM still can't move, right? And JPAL has also talked about in his Jackson Hole speech their monetary shift. IWM still can't move, right? This is a positioning conversation. They're trying to lighten up their short positions before they can't anymore, and it's still holding. So like the whole structure combined together is this kind of, I'm not going to say powder keg because we don't really get powder kegs anymore, especially when you're in this strong uptrend. You'll get power moves, but not powder kegs. I hope you get an IWM, but it hasn't shown that same moxie.
That IWM, that monthly chart looks phenomenal to me.
Yeah.
That shake under that, the tariff lows and that tail. I mean, man, it just looks like a catapult.
It does, and it's not catapulting, right? It's like, wait, what? You have all the different elements of what you would need to catapult, and it just doesn't, right? And so that tells you a lot about like how people are positioned, and tells you a lot about what's going on here. And I think it's a matter of time, and the question is, do you have the time and patience for it? Because this 2025 has required time and patience. If the backfill, the retest of the retest, it all kind of seems in balance now, right? And from here comes the move out of the balance, whether it breaks the bottom of the box or the top of the box.
So GP, just looking at the IWM right here. This is the monthly chart. I mean, it's pretty much a retest of all these topping wicks, right?
Yeah.
Would you be a buyer here?
I think anything under 245 is probably a really good buy. And if you're a breakout trader, then over 245 is obviously a really good buy too. And like gold, probably the more consensus buy once it clears all-time highs, right? Like we talked about gold, what, 2100?
That's what I was leading to, GP. This is what it reminds me of, is that gold chart that, look how long ago we gave the gold chart away. I mean, we're talking years ago. And now look at it. Do you see this as a similar play in the IWM to all of a sudden break out and do 80%?
Yeah, I think so. And I think this goes well into next year. So I think you get the powder keg once it clears 245, 246 or whatever the all-time highs is. But it'll be a clear uptrend. Like gold hasn't broken trend since it cleared that all-time highs, right? All you had to do was buy the all-time highs and sit pretty. And you've been in the gold trade since it broke out. Did you get it at 1800? No. You got it, or 1500 or whatever? No. But you got it at 2100, and you're still up 50 something percent from that moment.
Mm-hmm. Hey Nick, I know that when we were talking about gold's still on the screen. You kind of like this breakout trade. Do you see the IWM in the same fashion too?
I definitely would play it similarly because gold's kind of a little bit of a different argument, just in the sense that it's like a gold rock, or it's a metal, or whatever you want to call it. Where, like, the IWM is
Stocks.
yeah, but we're also talking about range and essentially like dead money. If you're in the camp that the IWM is definitely heading higher, I think that you should be looking for your points of weakness within this range to get long. If not, or you just want to wait for the breakout and not kind of sit in that dead money, then yeah, just set your alert for highs or wait for the highs to get breaking out. At least at that point, you have the momentum at your back. On the monthly, that was, let's see, hold on. In June, nope, I'm sorry. That was August. We just got the monthly MACD just crossed again to the upside. So there is momentum here. It's just, again, you're still kind of within the range and in the mindset that anything is possible, knowing what's coming this month. Neither a shake or a breakout would surprise me. I think the IWM should be your focus, especially if you're looking to traffic in individual stocks versus like an ETF or index. But yeah, I don't know if that answers your question.
No, that was great. For those watching at home, I went up here and marked 420 because that's about 80% from where we are now.
Sure.
The breakout would be a few percentage plus or minus from here, but that's basically what gold has done. So I like to put marks on the chart just so we can kind of remember those things at 420.
There's a saying that alignment supersedes time, and it kind of points to, like, the stock pickers, the guys that are trying to manage and massage their positions, where it's kind of like you can avoid a lot of frustration and preserve a lot of mental capital avoiding the range. But that's also knowing yourself. If you have the conviction, then again, by all means, build the position. But if you don't have the time and the mental fortitude to do that, then just wait for the breakout and wait for the momentum to be there. It's just kind of how I was. Yeah.
Is this a name that you would play either with options or commons or the leveraged TNA, Nick?
The thing that I've been really wrestling with, or the idea that I've been thinking about, I can't remember now who even said, or God, who said that? I would play the TNA on the breakout. Certainly would not be getting involved in the TNA within the range. Or any of the leveraged ETFs. Like, wait for the breakout. If you're looking at the pure, like, just the IWM, sure, you can build the position. Options, I can't. I'm not one to speak to the options play.
GP, is this a leaps thing?
Not yet.
Yeah. After the breakout, just after the breakout.
Yeah. So to me, it's 6 months, right? IWM doesn't do long-term uptrends. It does 3 to 6 month breakouts. So on the breakout, you have, I would say, give yourself 6 months so you can let it play out. If you're doing leaps, I'm doing shares, so I guess that's too much PTSD from this index, but yeah, you could do either one, but just make sure you give yourself time.
There's a dude in a Discord group that I'm in that will play the TQQQ only when price is trending above the 20-day moving average. If price in the index or the ETF is below the 20-day, he'll just stick with the Qs versus the TQs, which I thought was a fascinating concept. And that's kind of like what I've been thinking about. I'm like, man, that makes a lot of sense.
Yeah, and you
That's
can do that
trend
with
riding,
Socks and Soxel too, probably. I mean,
Yeah.
I think, yeah, I like
That's the
that.
definition of trend riding, right? And levering up
Yeah.
in your trend.
Yeah, I
Yeah.
like that. Speaking of good ideas that we like, just want to let everyone know, I'm going to pull up on the screen that it's September. It's starting to get a little chilly, at least where I am right now. But it's one of those burr months, meaning we have October and Stocktoberfest coming up. There it is. Stocktwits presents Stocktoberfest, October 20th through 22nd in Coronado, California. So, hey, maybe you see you boys there, but get your tickets. That sounds like a fun time. There'll be all kinds of events happening. Top traders, you see it. You can go there. Stocktoberfest.stocktwits.com. That should be a lot of fun. And as much fun as we have just talking with each other, it's always great to get other perspectives from other market participants, just like Nick was mentioning, the guy who uses the 20 for his leverage trades. So it's always more education, always learning more stuff. Nick, thank you for teaching us that today.
Yeah. Learn something. The day you stop learning, you're pretty much dead. So, always something to pick up and learn from the other participants.
So speaking of learning from, I know you two particularly have learned a lot from me, because in our group chat, you guys made me so proud today. I was just like, oh my guys, I love you so much. I was bantering back and forth about something that I was looking at, and I posted earlier the stock DFDV, which is basically a micro strategy or strategy version for Solana as opposed to Bitcoin. And both the guys said, we just buy the coin, we just buy the token. I was like, oh my guys, I love that so much. But I hope you learned something else, that I love to take on a hated name. And I can remember it well. We were on this call back in May, and Google has taken a big old dump, and you guys were like, don't know. But hey, look at Google now. Nick, have you changed your tune completely on Google?
No.
GP, have you turned tail on Google?
In the same conversation, we talked about rotation, right? So out of favor, now in favor. What's out of favor? Other things. It's rotation. So Google, let it shine bright, and then other things will shine bright. Oh, look, NVIDIA all of a sudden is weak, right? Google and Apple are strong, and NVIDIA is weak. Microsoft's weak. Meta is weak. You know what I mean? Like it's
the Mag 7 rotation station. But at the same time, news dropped last night about the antitrust, right? And normally these things, Nick, correct me if I'm wrong, they are sell the news events, but not in this case, or at least not yet.
I mean, I would argue that it is similar to the runaway gap that we saw in Microsoft. I don't know how you can be. I mean, when it comes to the mag names, I really want to just say buy the Qs or and make it easy on yourself. I'm still a believer that the mag names are going to become the too big to fail, essentially. Like the only way to outperform is to obviously, venture into other individual names, but I think the mag names across the board are still easily like a 5x from here, or 10x. I mean, couldn't really put a number on it, but longer term, I just don't think they've got way too much. There's just I don't see a scenario where they fail. or
So
like
the breakaway gap, are you meaning this from May in Microsoft?
Yeah, that's how I mean, it popped into all-time highs. And so even if you're not involved in Google right now, and let's say you bought it today, you know, you've got a size risk for what you can handle, but dude, you could risk it to 200. You could risk 25 points and probably still walk away with a phenomenal trade. When I see moves like this, I think that round numbers are going to act as magnets. So as soon as Google popped above 200, I'm like, ah, shit, this fucker's going to 300. Then that's the next logical like zone or place it wants to push. I think the conversation around like the conversation around tariffs, around money, around Fed policy, like it's all relative, and I don't think inflation is going anywhere. So it's kind of like we're all just arguing about this, like what's the difference between 1 billion and 10 billion, or like 1 million, 5 million. There's really like not that much of a difference. So like to argue like that kind of stuff to me, like it's over my head. I'm not gonna I've got nothing really to say to it. Like I can't argue.
I didn't have the chart up on my screen just a second ago, but here is the gap up today in Google, and this was the gap that Nick was referencing on Microsoft.
Yeah,
and I mean that's
still
20% from here.
It didn't quite pop into all-time highs, but that runaway gap led to the all-time highs, and then we obviously just melted higher. The gap, the EPS pop higher. I wasn't referring to that gap. I even think like Microsoft here. If you were patient and you waited, like you could easily play Microsoft here versus 500. I think. But anyways, that wasn't I'm sorry, the EPS gap is not what I was pointing to. You're right. Yeah. I was pointing at the one in May.
Yeah. GP?
I got nothing.
He got nothing. He's tired of talking. He's tired of talking about the megas.
Google looks like an exhaustion gap, but there's no volume to really support the exhaustion piece.
What type of behavior would have to what would it look like? Would it fail here and just start to slowly roll over for you to think that it's an exhaustion? Or
take a look at Microsoft, Meta, both huge gap up on earning, and what have they done since, right? So if the Mag 7 are following a certain price action pattern, then to me Google will follow the same pattern here. That's just what I think, right? People who are buying in the 150s, they're not buying in the 230s. And the people who are buying in the 230s are ready to be trapped by the people in the 150s.
That's fair.
That's fair. It's just typical price action. But as we're having this call, we are having a low volume fade across the board. So to me, like we've given up all the gains from the gap up already on the NQs, right? Not on Google and Apple, but across the board, which means that the acceleration to the downside in the other names is starting to pick up if Apple and Google are still holding, right? So you're seeing a bit more distribution around here, and maybe tomorrow Google and Apple rest and everything else comes back. I don't know the answer to day-to-day movements ultimately, but Google hardly ever, and maybe this time's different, Google hardly ever gaps up and then continues going. It always backfills. Right? Like look at almost every earning gap up it has. I think the last time it actually gapped up and did not backfill was like 2015 or something like that.
I'm not going that far back in the chart.
Yeah, exactly. So like need to see the price action change for Google, but mostly every gap up is faded. So I'll tend to lean to that side.
Last week we talked about software names. Snowflake reported had a big move after hours. Nick, you really like the IGV as a whole. Well, granddaddy IGV name Salesforce reports tonight. And I've had a knock on Salesforce for years. They always decide to report at the wrong time in what the market is doing. It's like never fails. But right now, the market's not in any great danger other than Nick's potential head and shoulders that he was calling out. But that doesn't mean that that's going to play out with earnings for Salesforce tonight. This is a name I've been in and out of, and I think I could make a compelling case to buy some weakness if it were to happen, or to buy it as it goes higher here. What do you guys think?
I like the double bottom play. I wouldn't, me personally, not a name that I'd be interested in buying versus weakness. It's just not a favorite name that I would be interested in doing that.
Yeah, but more importantly, do you think what this name reports is going to do anything to the structure of the IGV or anything that we're seeing in the market?
It might influence the other names in the space, but they all kind of look good. And if they do sell it off, I think it'd present kind of an opportunity, actually. Like Snow, for instance.
Yeah.
Snow, you could probably start getting involved in Snow kind of versus, right about here, like kind of the 220s. I would be not interested in Snow under that gap candle or the EPS candle on the daily. But again, that's the only reason I say that is because if that were the case, then I think the market as a whole is just kind of, again, weaker at the moment and needs time to digest or play out whatever is currently happening. So like if the Qs do resolve to the downside, why throw money at Snow? Just give it a little bit of time and you might find yourself either better prices or lower risk entries versus like being the first one there. Snow, I just pointed out because it had that, again, you could probably argue that that EPS candle is kind of an igniting candle and led to the start of kind of that stage one pushing into stage two, which everybody that's been watching Snow, I think, has been probably waiting for. But, Net, I think, is the strongest. Datadog looks pretty good. Just my...
MongoDB.
Hey, your Dave was looking pretty good today.
Dave does look pretty good, but just with the software, the software piece, I think it's like MongoDB just crushed earnings, right? Like I think even Snow crushing earnings is still quite expensive, whereas Mongo's crushing earnings doesn't leave it as expensive. So, and one hell of a power gap. So, like if anything, this is where I'd be looking to get long.
I'm with you.
Right, like so, CRM, we talked about it mid-August. It had the false breakdown, massive wick on the weekly, hammer candle. And we talked about how software can potentially be a false breakdown here. And sure enough, we saw Snow, we saw MDB take off. Now see if the Godfather comes in and does his thing, but ultimately CRM doesn't move wickedly huge like that unless there's something like outlying. I like it. I like the false breakdown across the board. It's been in a near 12-month downtrend as well.
Yep.
So you have MongoDB and Snowflake setting up. I wouldn't play earnings because there's not much buffer here, but post earnings is the way I would address this stock, right? Or buy in batches, right? So let's say I'm going to buy here, and if I get a 10% drop on earnings, I want to buy here. Find your levels in CRM that you'd be comfortable owning. That if you think earnings are going to be great, then you have some exposure. But even if the earnings are great, it has a terrible reaction, you have ability to add.
We love to buy in tranches. That's
Yeah.
the way to do it. Yeah. One name that I have posted a few charts on, and that I don't know, I'm enamored. Adobe. And I know it's out of favor, and I know all the tailwinds that you can say this company is going through. I kind of like it right here. I pull up the monthly, and like this seems like a range that I'm a little interested in with the IGV bouncing, but we'll see. Another name that's reporting tonight and was brought up in the chat. Thanks, chat. Hodl my beer asked for GitLab, and I think this is one that GP you had talked about maybe one time in the past.
A few times. These
Yep.
base breakout names just aren't breaking out. So it's really, they're just stuck. They're still stuck in this range, Nick, right? Like how many bases that look like GitLab? Look at Toast, right? Toast is another one. Similar structure, similar thought process here, and keeps going back to the bottom of the range. And so like looks good. It's in the middle part of the box that started in 2022. And
Yeah,
go
I
to the
can
top right.
remember very clearly we were talking on our YouTube show about GitLab. Probably it was either the night before earnings, and this massive 40% candle happened basically overnight. You'll see it on the daily somewhere over here. A huge gap up, and you're basically right back to that point, right?
Yeah.
So I see that as a pretty firm base, and if it were something that I were interested in, I would probably put my stop somewhere down here in this range. But I don't think it looks bad. It's just not going anywhere, like GP said.
Yeah, a lot of these names aren't, right? Like they have to execute. I'll give you we've talked about this numerous times, and how long was the base before they actually executed, right? And that's Wayfair. Wayfair is it continues to show up on the strength list day in and day out. Yesterday was green, right? And so like it took them a while to break. They're still not broken out of the base, but they had to execute to get the premium. And a lot of these IPO bases, we've talked about my distrust of IPO bases because they have to execute. Just because a base forms doesn't mean it happens overnight. The base may form for 10 years before it actually breaks out, right? Like
Yeah.
it's not like, hey, we had our big 6-month move up as soon as the IPOs, comes down, bases, and then breaks out. It's the base could be 2 years, could be 10 years, could be 3 months, could be whatever, but they have to execute. Fundamentals ultimately do matter in all these names. So the base only gives it the strength of the measured move, right? Once it's
Yeah.
ready to go. And it gives you the stability to know that when it gets into this base, it's had a lot of buyers. That if there is news related drawdowns and it gets to that base area, you get an opportunity to buy it lower again. Is it frustrating? Sure, but that's the whole point of bases. It gives you a point where other buyers have stepped in. So you guys are miserable in your own base.
Hey, Nick, I won't bring this up because GP hates IPOs so much, but Figma, this is a name. I don't know if you've been playing. It reports tonight as well. This was very hotly sought after the first day of trading, and now it's sort of settling in. Is this something that you watch or have been paying attention to?
I threw it on the watch list, but I don't even have any alerts set on it currently.
So right now you're not even interested in anything Figma does.
Nah, not my. It doesn't look very pretty. If it has like a, again, like a massive igniting candle, it'll pop up and show up as like a top, either dollar gainer or percent gainer, and it'll show itself on my radar. From there, I might, set some alerts, but it would likely be dependent on like how much capital I already have deployed and how much like more risk I'm willing to take on. It's kind of like a lot of times, like if I find myself like in the flow and in the zone, it seems like everything I'm doing is working, then I'm a little bit more apt to kind of take on like either a starter or kind of a little bit more aggressive plays like that. But that's just my kind of take. And that's the beauty. I mean, we've kind of spoken to it before. It's like the beauty of retail is, putting together your watch list and continually curating it, spending the time to like set the alerts. And again, as long as you have that list put together, like I said, the name it'll show you when it's ready, just by the way it shows up on, again, like the percent gainers or dollar gainers when on your list. So I mean, if you start seeing like day after day, like figs up there and it keeps popping up, then it's like, hey, maybe I should pay attention to this. But
if you were inclined to take something on in the IPO space, the eToro chart, the eToro chart is probably it's already done its earnings thing. So like you have more historical data to trade against, right? It's binary events with earnings. So you never know.
Shout out to
can
eToro.
Go back to its IPO open, right, of 33 or whatever they priced it at on earnings. So like eToro's already gotten all that stuff out of the way. So I would focus on eToro than I would on Fig, because it still has to do price discovery.
For sure.
One name that's trending on Stocktwits is Rocket Lab. A big down day, down 10.5% or so, but it's really only testing the low of where it was 6 days ago. Is this something you guys are looking at? Anything you're interested in?
It was actually one. Better be lucky than good. It was just happened to be one that I kind of trimmed on weakness, or sold out of on weakness today. I certainly didn't anticipate seeing this big of a bar, but yeah, it's still within the range. Like it's still within that range. Again, like you dump something, just reset your alerts. You can always re-enter either versus weakness, get a better price, or set it in strength. However, you're gonna kind of nitpick your entries.
GP, this has been my portfolio pretty much all summer. It's like, oh look, Hims is having a great move. Oh look, Rocket Labs is taking a big fat dump. Oh, you're neutral, flat, yay. So that's it. It's Rocket Labs is retesting the breakout that happened. It is a bearish engulfing bar. I'm not going to argue any of that stuff on the daily. The volume is not high pace at all. It's the breakout happened 6 days ago while the market was dumping. Rocket Labs was holding. Now the market isn't dumping and Rocket Labs is dumping. To me, this is your shakeout before the breakout move, because it's back testing the breakout. So let's see what happens tomorrow. But I'm assuming if Rocket Labs goes up tomorrow, Hims will be down 15%. So just throwing it out there.
Well, let's bring up Hims. I got a few questions on Hims the other day when I was doing some charting. But I mean, this is exactly the spot it was back in June that we talked about. Pretty good risk reward in this area, GP.
So yes, but we also talked about the Hims look going into the market meltdown in April, right? It turned green before the rest of the market did. And then once the market went green, Hims started to falter, right? Like it kind of just went sideways. So Hims was over that weakness in the markets over the last couple of weeks. Hims was one of the first to go green, and it's kind of gone kind of sideways here. It looks exactly like the end of April kind of little base that it formed. So yeah, let's see. I think tomorrow and maybe Friday it gets faded. a couple of red days that people will say, hey, look, game over, maybe even breaks the 200 SMA, whatever. But I think this is now within the next couple of weeks setting up for a much bigger move higher. And this time, I think shorts eat it to the face, right? Their 66 won't be resistance anymore.
It's off the 200, Nick.
I kind of like it here. I like the weekly engulfer. I think if you're getting long here, I think your next you want to wait and see like 55 ish get taken out. That's kind of the 50% retracement, somewhere right around there. 55, 56 is like the 50% from the most recent high to low. So I'd want to see that get reclaimed before adding to it. I was going to point out Oscar Health, being that it blew out, all of FinTwit, and now it's like building out a really pretty kind of an island bottom if it can kind of gap out of this range, but it's having a pretty strong day. I kind of think that like most of these names are just going to move with like the health and drugs and all that shit entirely. I think you've got to be, I think it's a space that you have to be focused on, because just as time moves on, I'm not quite certain if we're getting healthier or not, but like, just like everything else is kind of changing, like the health and wellness space too. It's like, people need, like, nothing matters without our health. So did you want to talk about TDoc?
No. So just a couple more things about HIMS is like, I've talked about this numerous times. It's founder led, right?
Yeah.
Founder owned. It's heavy short interest. It is not trading at some ridiculous multiple. Last quarter's earnings growth was 73% year over year, and it just ate 50 something percent down, right? Like, or 30 something, whatever the percentage was.
We're talking about HIMS, right?
Yeah, about HIMS.
I
Right,
mean,
we
it
went
is
from 66.
trading at kind of a crazy multiple, but that's okay.
What's that?
It is kind of trading a little bit expensive, in my opinion, but that's
like 4 or 5 times sales?
Yeah, well,
on a 73% growth, that's not insane, right? Like,
well, it's not Snowflake or Palantir insane, but the point is taken.
Yeah. And so like that's what I mean from like something that's growing that heavy tends to get a much higher multiple, in my opinion, and it'll grow into it. It won't. I'm not worried ultimately.
All right. Where did I go? Sorry, I was driving and I went somewhere else. Yeah, there's the Oscar Health chart, Nick. Not something I'm crazy about, but
it's one that's just remained on my, again, kind of on my watch, because it was a FinTwit darling. Everybody was all over it. It failed to break out, completely reversed to the low end of the range. And I kind of like the shape and the look of this kind of cup from, what is that, like August to now? July to now. I'm sorry. If I saw it gap above that gap low high, I think it's on.
Can you believe it's already been an hour?
Wow.
I mean, I think the markets beat us up after the holiday weekend, but I'll start. Normally, I wait till the end to give my one last thing to take with you.
Sure.
And I'm guilty of this. I will always be guilty of this. Hi, my name is Ben, or Holdingbags, and I love a hated stock. So I bought some DigitalOcean today. Ooh. So don't feel like you have to fall in love with everything that FinTwit's in love with.
Yeah.
You know, do what you stick to your plan, as we've said 1,000 times. Nicholas?
Yeah, don't fight the tape. I still again back to the Fed announcement 17th. I think that hold your strongest, stay nimble, and just respect the price action. I think preserve that mental capital, because I still do think it's going to be kind of a chop, weird, wild month, and I would just prefer to be I don't know, ready for anything.
Nimble. Be nimble.
Nimble.
Have a plan. Stick with it. GP.
Two things. Remember, September's volatility is because they're planning for the following year. So observing what's going on in September and what strength and what stuff is really good to notice, because they're setting up for 2026, right? They're positioning for it. Second thing is, don't hear about it anymore, but the Roku chart looks phenomenal.
Shitco summer, shitco fall.
Yeah, it does. Damn. Thanks, GP.
Awesome. Awesome. Awesome.
Yeah.
Great show. Love you guys. Love everyone in the chat. Thanks everyone for joining. You can always catch us on demand on YouTube or X, but we always look forward to seeing you. Visit us. Stop by in the chat every Wednesday at 2 p.m. Eastern time. Thanks for watching.